Trading futures and options on futures involves substantial risk of loss and is not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although this could be an equation for opportunity, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition of risk capital is money I could afford to lose, doesn't change my lifestyle, or overly stress me out. As human beings, we make bad decisions when we're under stress, so be in a good spot. Remember, micro contracts could be friends. Take it easy on the day trade margins. You get plenty of leverage without maxing out on those day trade margins on a regular basis. We'll be taking a look at a real-time simulated live NinjaTrader trading platform today, and none of this should be construed as trade or investment advice. Past performance not indicative of future results.
Well, good afternoon and welcome to Technical Analysis Explained. I'll be your host, Tom Schneider, CMT with NinjaTrader. And on Technical Analysis Explained, we like to focus and take a deep dive on one element of technical analysis so you can become better informed traders when you're looking at your NinjaTrader platform. This week, it's no different, although it is a little bit different because we do have a guest this week. Yes, we brought in a guest, an expert, if you will, on this particular study. This week, we have our very own Mike Burke joining us to talk about the Ichimoku study. Mike, how you doing today?
Great, Tom. Thanks for having me on here. I love this topic. This will be an interesting exploration of Ichimoku with both of us looking at this indicator. So thanks a lot. It's going to be fun.
Oh, my pleasure's all mine. I mean, I've always found it fascinating because there's several, there's moving pieces to this, right? There are different moving pieces, and I'm always interested to hear how other people interpret it, and you've got a clear grasp on what it is from what we've talked about. So it's my pleasure to have you on and talk about it. But really, what is the Ichimoku cloud study?
So what's interesting about the Ichimoku cloud is that it is really a comprehensive tool that provides a lot of different insights into the price action of an instrument, the market sentiment. You can get support and resistance levels from it. It can really be used in a number of different ways. And the name itself really means one glance. And I really embrace that name for Ichimoku, because that's really what it does. With one glance, you can get a very, robust view of any market very quickly.
It's almost like it's a very efficient indicator, right? Because it incorporates these different aspects of the market, and I'm not looking all over. It's right there in front of me. It's right there on the price action, on the price chart. But you're right, it is more than just price action.
So one of the things I think that drew me to this indicator, besides the fact that it has a cool name, is that the Ichimoku cloud and all the components are really based on probably my favorite aspect of technical analysis, which is price channels. So I'm a very price channel kind of guy. I love Donchian channels and different kinds of highest and lowest type channels. A lot of people don't realize that a lot of the indicators that they use every day are based on price channels. They just may not know it. Things like stochastic and RSI, those are looking at highest highs and lowest lows for the most part. And Ichimoku embraces, and in fact is at its foundation, is the price channel indicator.
Right, and one of the things about the Ichimoku chart I think is fascinating is how it identifies those channels and what it does with them, right? It's kind of I would say, probably one of the first indicators to really address the idea of offsets in a study. I might be getting ahead of myself, but that's one thing that I think that's a key part of the indicator is once you get your head around that, there's a reason for these offsets. There's a reason for moving this data around, and it's really pretty smart.
So if you think about it, the principle here of the Ichimoku cloud is that things that happened in the past are very likely to influence things that are going to happen now. And so the way that it deals with that is that it takes these price channel calculations and displaces them forward into the future, so that you can actually get a, I don't want to say the word projection, but you get a view of what's happened in the past and how that may affect what's going to happen next.
And, it's interesting. That's just a slightly different way of, it's a way of describing what we do already, let's say on an intraday chart with volume profile. We're looking at where there's interest, where there was interest before. Are we coming back to that area? This is just a slightly different way of looking at it with offsetting that data.
Yes. And, and I totally agree. But I think this is one of the best ways of looking at that data. It gives you such a great visual on the chart so that you can put everything in perspective very quickly. But just the math of it and if you watch it week in and week out, year in and year out, like I have, you realize that there's something to this, and those levels hold up, and it can identify the trend direction. It can help identify changes in trend or reversal. So, anyone who watches this indicator for any period of time, they become fans as well.
And I would say this, somebody who spent a lot of years looking at data visualization, of trying to make data more efficient through different ways of displaying that data, this is probably an early case for where data visualization succeeds, because what you're talking about, the concept, is translated so nicely onto the chart.
I completely agree. Hey, let's look at some charts.
Yeah. So, Mike, so here I've brought up a daily chart of the E-mini S&P 500 December contract. And we've got about, well, it's the entire year so far, plus a little bit into last year. But what would you say about this chart with regards to what the cloud study might be telling us?
Okay, so let's do just a little bit of geography with the chart here. So the shaded area that you see there, green and red, that is the Ichimoku cloud itself. And that cloud is based on two lines that you see there on the chart as well. It's an orange line and a purple line. Those two lines, one is called the conversion line. The other is called the baseline. The conversion line there is the orange. And basically what those two lines are doing, those two lines are kind of the Ichimoku's version of moving averages. It's basically averaging the two price channels that the indicator is looking at. And when that orange conversion line is above the baseline, that's a bullish mode. And vice versa, when the orange line is below that purple line, that is a bearish mode. So those crosses can indicate changes in direction, changes in sentiment. When the orange line is above the purple line, that's a bullish mode. When it's below, it's bearish. So those two lines give us the trend of the market and possible turning points. The cloud allows us to see where there could be buying and selling pressure now and in the future. So those are really going to help us with support and resistance levels more than anything else. So let's say that we're in a bullish mode. So the top of the cloud is going to be that first level of support. And then if it gets in, let's say the market moves down to that level of support, but continues down against the trend, then the bottom of the cloud becomes the second level of support. And also, when it's in the cloud, think of the cloud like a swamp. It's very difficult. You have to really lift your legs up out of the muck to really make any progress. And the price for an instrument has the same problem when it's in the cloud. And again, based on the idea that, in the past, there was buying or selling pressure in those areas, that buying and selling pressure in the past is also going to create that same pressure now. And so the cloud is kind of the headwinds for the market moving through it. And then conversely, if we're in a bearish mode, the first level of resistance, this is when the price is below the cloud, the first level of resistance, if the market goes against that downtrend, starts moving up, the bottom of the cloud will be that first level of resistance, and then the top of the cloud will be the second level. And again, just like we said before, moving through the cloud can be sometimes very, very tricky. So with that out of the way, if you look where we are right now in the E-mini S&P 500, we have been in the cloud there for quite a while now. This is a daily chart, and so just to kind of level set what we're looking at the E-mini here on the daily bar, and you can see how the cloud, once the price is in the cloud, that acts as that kind of quicksand, if you will, or the swamp, and it's hard for the prices to get out of that. Notice how the price action here is actually in the cloud. Some of these bars are touching the upper and bottom, but it really can't break through that. And so that's a very common action that you'll see when the price moves into the cloud there. And so notice that here in the last couple of weeks, this is a daily chart again, that the orange, that conversion line is crossed above the baseline right there. So that is telling us that there might be a change of direction. We might be going from a bearish mode that we were in into a bullish mode. And right now, that really has not played out. We're still in the cloud. And now the prices are breaking through the bottom of the cloud. And that is typically a bearish sentiment for this particular market. So here, we're getting a few mixed signals, not a lot of clear signals here in this particular chart, but you can see that it's now breaking out at the bottom side of the cloud. That's typically bearish, and but I think this market is a little more neutral than bearish. How do you see that, Tom?
Well, I agree. I think what's interesting to note is you're comparing the past with the cloud, and you're also comparing the present with these two lines, right? So the conversion line and the baseline representing what this momentum has done recently versus the cloud, which is offset from previous days. So you're right, there is conflicting signals. I agree. This isn't really telling me very decisively because these signals aren't lining up. You don't have a cross below lined up with a cloud, a negative cloud. Getting out of the cloud on the downside, but having a positive momentum indication about 2 weeks before, they're not lining up. So I agree. There's a little bit of, I wouldn't say confusion, but there certainly is an agreement in the market of what direction this could be. And we've seen it, right? We've seen a pretty tight range of 150 or so handles for the last 6 weeks.
The couple of interesting things about this particular chart. One of the things that I look at is how thick the cloud is. So when the cloud is thick, then the top and the bottom of the cloud are stronger support and resistance levels, in my mind. Second of all, when the cloud is thick, it takes more bars to get through it. So that's something you also have to consider. If I'm here and I have a thick cloud above me or below me, and I'm expecting it to go through the cloud, how long is it going to take to get through that thick cloud? So you got to look at that thickness a little bit. But what's interesting about this chart is notice how there's a flip between green and red here coming up in the next couple of days. When you see these flips, the support and resistance level for Ichimoku becomes very weak. There's not a lot of support and resistance at those flips. So that can tell us that there's an opportunity for the market really here to go in either direction, that there's not going to be a lot of headwinds in the market moving in one direction or the other.
And that resistance level, because it is the bottom of the cloud, it doesn't really matter what color they are, right? So the green we see in an uptrend and maybe the red we see in a downtrend, but the bottom of the cloud, it's still resistance. So if we're coming at it from below, what you're saying is when we flip, it's really skinny, it's really thin. And if we do pierce the bottom of the cloud, it might be easier to get over and continue as support as we go through.
Absolutely. Notice that, from in this chart, from June and even before June, we've had that nice rally in the ES. Notice that the cloud is green during that time. So just, again, going back to the name of the Ichimoku, at a glance, you can see very quickly that this market is in a bullish mode. The cloud is green, the market is above the cloud. That's a bullish mode. It makes it very easy to tell. The fact that the daily chart in the ES is turning red in the next couple of days is a bit ominous, because even though it's flat and it's not falling yet, it is telling us that there is the potential for downside pressure, downside momentum here coming up in the next, few days, few weeks, maybe.
And what I like about what you highlighted, this trend that began mid-May, is not only did we see the cloud turn from red to green, and that cloud was in an uptrend, as well as the price, but we also got that signal almost lined up pretty close, which doesn't often happen, or it doesn't always happen. And what followed? We had a nice 3-month run up until the end of July, really, or maybe into August. What is this? Even the S&P up into the end of July, and that was a nice signal for the Ichimoku cloud. But it doesn't always work that way, as we're seeing a little bit of a pullback, and this market is trying to figure out the direction. So is the Ichimoku cloud and the Ichimoku span and the conversion and baselines as well.
Yes, like many indicators, the Ichimoku cloud just needs a little bit of time to adjust to the price action. And what's great about this is it's not generally looking at what's happening right now. It's looking what's happened in the past and projects it forward. So it's not always going to be perfect, but it gives you enough information to make better decisions. That reminds me, one quick thing I want to talk about here, Tom, is that you have a blue line on the Ichimoku here. And that is the fifth element of the Ichimoku indicator. It is called the Chiku span. And basically, this is just a momentum indicator. So think about a momentum indicator. Is the current bar, today's bar, higher or lower than a bar some number of bars ago? So 10 bars ago, 20 bars ago. If today's bar is higher, that's positive momentum. If it's lower, it's negative momentum, right? That's what the blue line is telling us. It takes the current day's price and it displaces it to the left. And if the prices are above it, if the prices are above that level, that's bearish. And if the prices are below it, that's bullish. So if that blue line is above the prices, that's bullish. If the blue line is below the prices, that's bearish. So two ways of looking at it. In this case, if you go back and you look where the blue line right now is, it's right where the bars were at that time. So momentum is flat, which is what we're seeing in the current price action, where we really don't have a strong directional bias at this time.
And I think you define that so well, because it's always been a concept that I haven't really struggled with, but it just is one of those first look at it. You think, what is this line doing back here? What can I do with it? But it goes back to that one glance name, which is, if I know that this blue line represents the current price and I want to see how it was a month ago or 26 days ago in this case, then I just have to look and see where that blue line ends and say, okay, price is under where it was a month ago. Price has gone down. Momentum's changed, or it's gone up, or it's stayed the same. So it's just getting used to the idea that not everything is served up on the current bar. You do have to, know where to look, but it's easy to know once you've learned that and know where to look. Oh, about a month ago on a daily chart, or half a year ago on a weekly chart, because 26 weeks is half a year. And, that helps you with momentum, because momentum is just change in price, right? So that comparison can be done visually, can be done quickly once you know what you're looking at.
So that's a good point. This is a daily chart. Let's look at the weekly chart. So it's always good to have multiple time frames that you're looking at when you're analyzing the market, trying to figure out a trade. Every trade has a number of elements or a number of story elements that have to come together in order for you to make a trade. So looking at intraday charts and daily charts and weekly charts is a perfect way of building a story to make a trade. Notice here on the weekly chart, that blue line we were just talking about is way above the prices on that point, at that point. That is bullish. That means that the price 26 weeks ago was down here and the price today is up here. And so we have positive momentum, which obviously you can see there by all the intervening bars. But the point to that is that momentum is such a clean, pure concept. Are we higher than we were some number of bars ago? Forget all the noise in between. That doesn't matter anymore because I'm here now. Doesn't matter what really happened the last 26 weeks ago during that time. All that matters is, am I higher or lower than we were 26 weeks ago? And if we are, then that's bullish. I have positive momentum.
Bringing back the idea of the multifaceted information that this brings you, we do have these the conversion and baselines crossing back here in May on a weekly chart, and it hasn't seen a cross since. It did get through the cloud. The cloud is red. The cloud is bearish this whole time, yet the market's been up. So this cloud really isn't relevant until we get to it, right? So just because the cloud is red doesn't mean the market is going to go down. Just because the cloud is green, it doesn't mean it's going to go up. This is relevant because it's current data. This is kind of showing you, it's like a map. It shows you where you've been, but maybe not where you're going. This, I think, sometimes can take precedence, but this also tells you, hey, this is another clue that we're bullish. So, a lot to take in. It's not always an agreement, but just understanding almost maybe a pecking order of what indicators you would look at, I think is important to know.
I agree. So again, as we said at the beginning, this is kind of telling you what the market did in the past and what it expects will happen now. So imagine in the red cloud that you're talking about, notice how it goes up to the red cloud there in May or in March, right? That big green candle there in March, it comes up and the cloud is resistance and it stops at the cloud. But this market is strong. It wants to go up. But because in the past, whatever those calculations were, the cloud is telling us that the market should be bearish right now. And in fact, what happened was that the market did not just zip right through the cloud because of that red, thick cloud. It actually had to work its way through it. And it took, I don't know, that looks like 8 or 9 weeks to make its way through the cloud, a little bit of consolidation there, and then it finally broke through. Imagine, if you will, that that's a green cloud. And in the past, they're projecting it to go higher. Think about how quickly this market might have moved through a green cloud and how much higher we might have gone if we didn't have that bearish sentiment or that selling pressure during that time from March to almost June. So what's important here is to, like you said, it's not going to tell you exactly what's going to happen, but it's an indication of what might happen. And you can gauge that market action by just kind of following some of the basic baselines that we've been talking about the indicator.
Oh, I agree. And the cloud, I look at it kind of like Jello or something,
Jello,
butter.
Jello's a great way to look at it. Yes.
You're running into a wall of Jello, and you're probably not going to punch through it if it's really thick. Maybe if it's thinner, you can get through, but you're going to spend some time in there, even though the momentum is there, right? The momentum is telling us, look, this market wants to get higher, but it took a while. And even you had lower lows in here. So it was almost like it didn't really know what it wanted to do. Ultimately, it was bullish, but you're right. It took a while to get through this cloud. And then when it did, it was a little more directional.
Absolutely. I'm more of a lime Jello guy anyway.
Well, we can move this over and see. Well, there's lime Jello ahead. Good for you, Mike. I like that. Well, I think, we've talked about a lot. I'm sure there's more that we can talk about, but I think you've covered the basics pretty well. Where this is a study that's not native to the NinjaTrader software. So if you wanted to find the study, you should go to the NinjaTrader ecosystem and just look up Ichimoku or cloud study, and you'll find it in your search engine. You'll go to the NinjaTrader ecosystem. You'll be able to download that and import it and use it just the way Mike explained.
That's a great suggestion. The other thing is you can always watch Jim and Tom on opening range and bars closing. Tom uses Ichimoku Cloud quite a bit there. You can always ask for a link to the Ichimoku Cloud in any of our events. We can drop that into the chat for you. Tom is also writing an article on Ichimoku Cloud, which will be published in the next few weeks. That'll have a little more detail about how it's calculated and how it might be used. And of course, there'll be a link in there as well to get the indicator.
Well, Mike, it's been great having you on and having this conversation. I know we talk about charts and everything in the back end of our shows, kind of off record, but it's great to have you, with me on the show, because I know you have years worth of many years worth. I shouldn't say a year's worth, many years worth of
too many years.
Too many years. So it's great to have you on and talk technical analysis.
It's been my pleasure. This is always fun. This is an indicator that I'm passionate about. I think it can help everybody. So thanks very much for having me on. It's been fun.
Thank you again. And thanks to the viewers. And we hope to see you at the bookend shows. In the meantime, have a great trading day.